Welcome to the latest conversation by Primary Bid. Today we hope to deliver a short introduction to new space. The industry has undergone significant change driven by both industrial and technological innovation, and whilst we're probably aware of some of these, notably through the publicity generated by Elon Musk, Jeff Bezos and Richard Branson, new space is considerably broader than those headlines, both in terms of applications and the implications for a whole suite of industries as the availability and quality of new data increases rapidly. As we've just spoken about, another important factor for investors is that space is no longer the sole domain of governments and government organizations. Instead, private companies are playing an ever-increasing role. Today we'll explore both of those themes before hearing more about Seraphim Space Investment Trust, a vehicle that offers investors exposure to early and growth stage space tech companies. Finally, we can bring the process of investment in new space to life when we hear from Satellite Vu, a company that plans to use a satellite constellation to become the world's thermometer and monitor heat waste to assist in decarbonisation and our path to net zero. To deliver all this, I'm thrilled to be joined by the CEO and venture partner of Seraphim and the founder and CEO of Satellite Vu. Mark Boggart is a pioneer of space tech and co-founder and CEO of the Seraphim Space Fund. Welcome, Mark. Patrick McCall, joining virtually, has a long and distinguished career in the space sector, having worked as the chair of Virgin Orbit and Virgin Galactic. His achievements include financing the development of Virgin Galactic and Virgin Orbit, culminating in the flotations of both companies. Patrick is a venture partner at Seraphim. Hi, Patrick. Finally, please meet Anthony Baker, founder and CEO of Satellite Vu, a portfolio company at Seraphim who can give us a different perspective on the evolution of the industry and the role that Seraphim plays. Welcome all once again. So I thought we could start with a broad perspective and first of all define new space. Perhaps to put it into context, you can help us understand the historic challenges of investing in space and how technology has helped to alleviate many of these. Mark, I'll start with you, but please, I of course welcome comments from all.
So historically, space has been the domain of governments, principally because it's so expensive to operate in space. So what's happened in recent years is that private investment has come into the space market, principally around launch, in order to reduce the cost of sending a kilo into space. So there are a number of parties that have been driving this change. They're often quoted, Elon Musk, Jeff Bezos, Richard Branson. But what they've ultimately led to is a reduction in cost per kilo that has opened up space to a greater commercial environment. So to put this into perspective, the cost of sending a kilo into space 20 years ago was $86,000 per kilo, and today it's less than $1,000 per kilo. So nearly 100x reduction in the cost of sending anything to space. So that's opened up a market. The other thing that's happened at exactly the same time is there's been a revolution in the satellite industry. Satellites used to be the size of a car or the size of a bus, costing hundreds or millions or billions of dollars. And what's happened in recent years is entrepreneurs that are privately financed have been taking components from other adjacent industries, such as the consumer electronics industry, oil and gas, automotive industry, and building their own satellites. These satellites are smaller, lighter and cheaper than traditional satellites, but they've got as much functionality. So bringing those two things together it's created an opportunity for the commercialization of space and the potential to build constellations that are measured in hundreds or even thousands.
And as we've seen this huge increase in the number of satellites, what's that managed to unlock and what are the consequences of that?
So traditionally, a satellite constellation, a large satellite constellation, would be measured in one or two hands of satellites. And what's happened now that constellations are growing to hundreds or even thousands is that the data or the communications that they're able to provide are close to real time. So they're low cost, high resolution, and close to real time. So this provides a new capability, a new digital infrastructure from space that can provide capability to every single market and drive a whole range of trends that are already underway.
So really the commercialization of space, huge increases in the number of satellites, a massive increase in the amount of data, and therefore implications to many industries that we all know today.
Absolutely. And in the way that GPS has revolutionized so many industries and has an impact on our everyday life, these new capabilities that are developed by new space are also going to be changing the world.
Patrick, you have lived this firsthand through the commercialization of a number of Virgin companies. Anything you'd add to what Mark said?
Sure. I mean, I could probably use a non-Virgin Galactic, Virgin Orbit example. One of the companies that Virgin was involved in, startup investor, and I was on the board of, was called OneWeb. And another shareholder was Airbus. I spent a lot of time with Airbus down at their facility in Toulouse, and they used to, this is only 7 or 8 years ago, they used to show me around their satellite manufacturing plant. And the satellites, as Mark just said, were the sizes of double-decker buses, just enormous. They take about 4 or 5 years to build. They probably cost about $1 billion to build. So if you think about that, plus the launch costs of that, I mean, getting a double-decker bus into space is not cheap. The payback required from that took years, probably about 30 years. So you're building something, by the time it's launched, it's probably technically obsolescent. And then you've got to leave it in space for 30 years to get your commercial payback from it. What's changed since then, as Mark just said, is you can launch, you can build a satellite. I mean, Anthony will talk about his SatView satellites later on. They're a bit more expensive, but you could build a satellite for $100,000 and launch it into space for less than that. So the whole game in terms of what the amount of money you need, the payback period you're relying on to get a return from it is totally transformed, and all the applications you can get from it. So in that short period of time, 7 or 8 years, I'd say the whole industry has been totally transformed by lower launch costs, plus the small sats that you can launch now, some of which are the size of the coffee cup we're all drinking out of right now.
Could I just provide some stats that sort of put this into context? So there's only ever been 13,000 satellites that have ever been launched. 5,000 operational in space today. 80% of those were launched in the last 3 years. So it just shows where we are in space at this point in time.
That's a very, very steep ramp. And it strikes me it might be helpful having described the increase in data capture and therefore data analysis, maybe just share with us a couple of industries that you would point to for whom this is really relevant.
So there are a whole range of industries that are being driven by this new data and communication tsunami. So first of all, climate and sustainability. So the world faces some significant issues, and the weather events, the wildfires, the tornadoes, the floods that we're all witnessing with records every year need to be addressed. So space is a market, through this data and this communication, is able to better monitor the situation, able to potentially predict, and certainly help with markets like insurance in order to be able to cover the costs of the cleanup, to help with the humanitarian efforts after these events. So climate and sustainability is a huge market that is addressable by this. Then there's the communications market. So communications has always been a strong area from space, but what we're likely to see and what we're expecting to see during the course of the next few years is the broadband coming from space. So we've got companies like OneWeb, and we've got companies like Starlink that have already started to build their constellations. But then there's the communications via mobile phone from space. So what we're already starting to see are cell towers that are being launched into space so that any mobile phone can communicate through space. That means that the half of the world that aren't connected today can start connecting through a simple mobile phone in order to access the internet. That's going to drive education, it's going to drive health, it's going to improve standards of living. And then there's a whole range of other important areas like mobility or autonomous mobility that are going to be driven by data from space. The autonomous cars, the flying taxis, drone deliveries to your front door, all of these are areas that are going to be driven by this new digital infrastructure that's being created.
Anthony, I'm conscious that we'll come on and talk about satellite view in some detail later, but anything that you want to add to this piece in terms of how space has become increasingly commercial and the drivers of cost being such an important function of enabling all of this data capture?
Yeah, so where we see it is the cost of the hardware and the launch and the operation has reduced immensely with cloud computing to help processing at scale. So that allows us to produce data, and then we can process that into insights to help people make better business decisions at a much lower cost than was before. But before it was the purview of large corporates or defense organizations who had endless money, perhaps. But now we're going to make this data available to everybody and make it relevant to everybody.
Thank you. Mark, you mentioned climate as being a particular focus, and I see that responsible investing is quite prominent in lots of your investment literature and what Seraphim stands for. Can we talk a bit about how space tech has the potential to improve lives here on Earth? And of course, Patrick, I would welcome any views that you have too.
Yeah, absolutely. So where we are today, the opportunity of this digital infrastructure from space is about the better monitoring of our planet, enabling us to be able to use that data to make informed decisions. So for example, you can look down at a farmer's field from space and identify which part of the field requires watering because you can understand soil moisture. So that preserves the precious commodity of water. So if you think about how important that is in places like Africa, then from exactly the same platform, you can also identify bad actors, those companies that are chopping down rainforests or dumping effluent into the sea and polluting the rivers. They will be held to account by the audit that's available from this capability from space. That's where we are today. Looking forward 5 years or more, there are emerging opportunities that I think are going to be even more impactful. So this is the ability to be able to lift whole industries into space. So things like data centers in space. Data centers are already a hugely pollutive industry, more pollutive than the airline industry, and that's going to get worse over time. So lifting industries like that into space is going to become a reality. And then extending that, other industries that will serve us from space include things like energy. So harnessing the power of the sun in space, solar farms in space, to be able to provide us with clean energy. And then that extends to things like agriculture in space. In a decade's time, there isn't enough space on the Earth to grow enough crops to feed the population that's forecast at that time. We need to find alternatives, and we believe that space has the potential. So there's a whole range of areas that space is able to help and support and address many of the issues that the planet's facing today, but also in the future.
Fascinating. Patrick, anything that you would add?
Sure. I mean, I think we're talking a lot about the commercial applications for space, but I think, as we just touched on, that the opportunity to do good for the world and help the world at a really tough time is that there are just so many opportunities from space. I mean, just to give one example, I mean, if you read David Attenborough's latest book, global population, I think we just went through 8 billion actually today. It's an issue, and his way of solving that is to educate people, particularly women in the developing world. I think probably the most powerful and easiest way to do that is this, as Mark just talked about. There's 4 billion people in the world that don't have access to the internet. We all take that totally for granted. We do our education through it, we run businesses through it, and we get our health to a large extent provided through it. The extent to which you can take that to the developing world and particularly sort of give people meaning there in terms of different opportunities, especially for women. David Attenborough is saying you can reduce peak global population by 1 billion people, and I think space is far and away the easiest way to do that.
Thank you. Should we narrow this conversation a bit and talk a bit more about Seraphim? And it would be interesting, Mark, to hear, given your financial background, what sparked your interest in the sector and led you to co-founding Seraphim Space Fund?
So I'm a career venture capitalist, and have spent my career investing into technologies that we now consider to be Industry 4.0. So these are technologies like Wi-Fi, like IoT, like artificial intelligence. And what became apparent to me in 2013, 2014 was that space as an industry had really not been adopting these technologies that were really driving change, digital change in other industries. And that it ultimately dawned on me that, that space was going to go through a period of time where these technologies were going to converge on space and create a period of disruption. So that's exactly the reason why we set up the Seraphim Space Fund, which at the time was the world's first space-focused fund.
Interesting. And Patrick, as one of the most foremost pioneers of space tech, perhaps I should ask you why you chose to join Seraphim. You're obviously a very busy man who's got quite enough to do, and it might have been easier to enjoy things elsewhere.
Yeah, well, I'm enjoying things elsewhere as well. But I think I've seen through Virgin Orbit, Virgin Galactic, OneWeb, and the people, the customers they're all talking to, the opportunities in space. So once I left Virgin early this year, I decided I didn't want to just go away and play golf. I was keen to remain involved in the corporate world, and particularly focusing on companies that were going to be doing good for the world. And I think, as we've just talked about, the opportunities in space, new startup companies that are growing really fast, very similar to what I was doing at Virgin, taking them through those growing pains, but using really exciting technology, everything from like identifying what's happening with seaweed growth, which is a great opportunity for the world from a carbon capture perspective, through the biomass issues that Mark was just talking about, identifying problems with biomass development in the world so we can predict starvation, through to solar power generation. I mean, this has always been a dream for many, many years that we can generate power in space, but it's going to happen in the next 10 years. And we just talked about server farms in space as well. D-Orbit, one of the Seraphim investment companies, they're about to use, it's going to be pretty small scale to begin with, but they are going to have servers in space. So the excitement and the ability to work with these companies that Mark's invested in, with amazing entrepreneurs, with very young teams. I'm keen to hang out with young people and to do some good for the world and make a commercial return for Seraphim is just really exciting.
I can see why. So Mark, Seraphim Space Fund was the first. What differentiates Seraphim today? What are your key competitive advantages? And I guess as an additional question, but maybe linked to it, is why choose an investment trust as your investment vehicle?
So the Seraphim organisation is across three different parts: a space accelerator, space venture, and space growth. So the investment trust is our growth fund that focuses on more mature space businesses. Our venture organisation focuses on the seed and Series A stage, and our accelerator looks at companies that are pre-seed and that are looking to raise their funding round. So as we launched the world's first space-focused vehicle, we were inundated with opportunities from entrepreneurs around the world that were looking to finance their space businesses. And we built a very successful portfolio in our first venture fund and provided a very significant return to our investors. But what we found ourselves doing was having to say no to a lot of quality management teams with great propositions, simply because we only had a limited amount of resource, both in terms of people and the cash to invest. So this was the reason why we created our accelerator program, and this is where we met on our accelerator program. Anthony was one of the first to go through one of the first accelerators. So we've built this accelerator now where we take around 10 space companies at a time. These are seed stage businesses. They go into a 3-month program. And during that program, we help introduce them to our corporate partners to help them assess their technology capability and functions and features. The second part of the program, we introduce these companies to our VC friends from around the world who then syndicate and invest. So through our first 8 accelerator programs, the companies have raised more than $230 million in seed funding from 92 different VCs. So we're now in our 10th accelerator. We've expanded that into the US. So we've got 2 accelerators running twice per year. And that helps us filter a huge amount of businesses in the space industry and put them into a program that we can then effectively provide a due diligence exercise. So we take an option over the businesses that go through that accelerator so that we can monitor those businesses and take up those options in the years after they've completed the accelerator. So that allows us to be able to effectively take risk out of our investment because we've been monitoring these companies for a period of time before we actually then invest. So we make most of the investments, the riskier investments, through our private venture fund.
Those are presumably smaller scale investments because they're younger businesses.
Correct. These are seed stage businesses, the Series A stage businesses, and they're the highest risk end of the investment market. So these businesses are highly ambitious and they are running very quickly, but large market opportunities, but have significant potential to fail. So the investment trust is the vehicle that looks to invest into the companies once they've reached the B series round of investment. So that typically means that the technology has been developed, it's been proven in space, it's got customers, and the business is now then looking to scale its operations, but with a lot of the technology risk removed. So the investment trust then invests in larger rounds. It supports the B rounds, C rounds, D rounds, pre-IPO rounds, investing in this really exciting global market, but with some of the technology risk that's been taken out before it gets into the trust.
Right, got it. So the accelerator acts as a feeder vehicle, and it gives you more time and information to judge those that are ready to move forward into their next stage of growth.
Right.
I'm also interested in it might be interesting to hear from Anthony here. It sounds as though the accelerator program delivers value not only in the capital that it offers, but in the network that it opens to you in terms of some of these industrial partners and actually funding from other sources too, Mark. It sounds rather...
This is a very collaborative approach. We bring together VCs from around the world. Investing into space is a risky thing, and it requires significant amounts of capital. So syndicating the investment helps all of the investors reduce the risk.
Interesting. How did you find the experience, Anthony?
Yeah, it was transformational for us. So, I'm a little bit of an old dog. I've got grey hair, but most of the companies I'd worked for before was a scale up. I never started at zero before. So joining Space Camp, it's like joining a university because there's so many bright people there with immense experience. But also it's like boot camp in that they teach you, they tear your presentation and your business case down to the basics, and then they build up, and then the program culminates in presenting to tens of investors. So you got this opportunity to go live. So the Space Camp is a really good experience for whether you're fresh out of a university or have some years of experience. You get to know each other. So Mark was doing due diligence on us. We were learning from him what VCs expected to hear. We could learn how to choose good VCs, and we stuck with Mark.
And I can only guess that the blend of all of those different people makes for quite an interesting environment, one that drives you all on to better things.
Yes, so and it's the contacts you get. So there's 3 stages, I think, of the advantage. One was the Space Camp. One is raising the first round, and then finally scaling. So in raising the first round, Mark and his colleagues know everybody in the industry. So the introduction, the quality, you meet people that want to invest, but expedites the process. Also, they are the best reference. I mean, space is complicated. It takes some money up front. It can be quite risky, and the revenues take a little while. Mark and the team understand that, and they can differentiate between what a good space company is and what a bad space company is. And they chose us, so hopefully we're on the good side. And then they go and tell the other investors who might not be experts in space. So on our board, we have deep tech, but not space expertise. We have impact funds who are very much caring about the environment, but they don't know about space. So Mark, has to pitch to his investment committee, but also shares that information to other investors and gives them the confidence to invest, and they've stuck with us.
Interesting. I think I've already got a good idea for a new Netflix documentary, but I'll maybe come back to that thought.
There's one being filmed at the moment.
Shall we delve a bit deeper into some of the components of investment management at Seraphim? And we've already spoken about one way that you help to reduce risk and improve your information set through the accelerator program. That clearly impacts deal flow too, because you've got this lovely organic source of deals. Should we touch on, maybe you want to expand on that further, or maybe we could talk about how you think about balancing the portfolio from a risk perspective. I don't know whether that means different sectors, different geographies, companies at a different stage of maturity, whether they're listed or private. It could mean lots of things, and it would be helpful to know how you characterize it.
Okay, so first of all, we've got this giant deal flow. We're getting to see the majority of the companies globally that are raising money for their space-related endeavours. So that puts us in a really privileged position, because if all of these companies are private, they're approaching us with information about their business and telling us everything that we need to know. What their technology is, how it's differentiated, who their customers are, what traction they've got with those customers, what the pipeline looks like. So that enables us to build something like an information asymmetry about the different businesses in each of the different subcategories of the space industry around the world. And by having a deep understanding of all of the different competitors, it makes it relatively straightforward to identify which is the right business to back. Now, we are very much investors in people rather than technologies. So when we're looking at making an investment, and it doesn't matter whether it's a seed investment that's going to go into our accelerator, an A series investment that will go into our private venture fund, or a B series or to D series that goes into the investment trust, the first thing and most important thing that we're looking at is what's the capability of these individuals? What's their backstory? Why have they created this company? What gives them the credibility to be able to do that? What have they done in the past that they're harnessing that allows them to be able to understand this market and to do something that's differentiated and sustainably differentiated in the market? So for us, it's about identifying the right people. The geography that the companies are in is irrelevant to us. This is a global market, so whether it's a French company, American company, UK company, really doesn't matter to us. So first of all, it's the founders and the team that they've built. These are the individuals that need to go out, raise money from other investors, hire quality teams, ensure that they keep those teams, and then to react to the problems that they're going to encounter in scaling up their business. So it's all about team first for us. So our portfolio is really built on an ad hoc basis. We are really focused on identifying the best teams in the best subcategories of the space market. Now, there are parts of the market that we choose not to invest into because we don't perceive that there are the right kind of returns for us to invest into. So, for example, the launch market has become very crowded in recent years. There's more than 150 rocket launch companies around the world, and they're all driving down the price of accessing space. Great news for the portfolio of the companies that we're invested into, but is that the right kind of thing that we want to invest into as a fund? So that's an area where we don't focus on. But where we do focus on are the companies that are building this digital infrastructure, the companies that are the first movers, like Satellite View, that are bringing infrared capability to the market. So those first movers are the ones that we're really looking to back. And that's because they're able to generate intellectual property, build patents around their capability, their technology, the markets that they're looking to serve. Because the space market is very limited currently in terms of the patents that have been taken out. Traditionally, the companies that were in this market were government related and weren't really focused on spending money on patents. So there's this huge greenfield that's available at the moment. So we're backing the companies that are first in the queue for these new markets and also building this intellectual property. So to go back to answer your question, we're really driven by people, we're driven by market opportunity in the areas that we're interested in, Our portfolio positioning is therefore rather ad hoc in terms of the geography, but in terms of the stages, we're very clear about the different stages. We've got these 3 different parts to our business, and in the investment trust, what we're focused on there are the companies that have proven the technology. They're already starting to scale. A lot of the risk has been taken out of that investment, and it's really the execution risk about how they're going to go and scale that business, how they're going to compete against incoming competitors is really where we're focused on.
Let me ask you maybe 2 different questions, but I think that they approach the same feature. In an example of success, is it possible that a company can outgrow Seraphim? Would it become too big for you to manage and to maybe exert the same influence over that you have done with your other investments? And then secondly, what's the process whereby you invest in a company akin to Satellite View, obviously not Satellite View, and you think it's going to work? You've done all of the research that you think is necessary, but it just doesn't meet its endpoints. What's the process of withdrawing capital from a firm like that?
So why don't we ask for Patrick to answer the first question, given his role within our organisation is about supporting these businesses that are going through that scale up.
Patrick.
Growing companies, it sounds easy, but it's actually quite hard. You start off with companies that are very small. They're typically a piece of paper, an idea, and taking that from raising the first amount of capital, refining the business plan, going into revenue, probably raising more money to get to cash flow break even, and then eventual exit, whether it's through a trade sale, private equity, or an IPO. One takes a bit of time. Some companies get there very quickly. Some companies can take a very long time to get there. Virgin Galactic took many years to get there. I think some of Mark's companies will get there much quicker, and I think Anthony can get there a lot quicker. But you go through an evolution through that in terms of people needing different skills. The skills for a startup with a piece of paper are very different to, I'm now generating hundreds of millions of revenue and I'm going to IPO the business. You need different people for that. So evolving the management team over time is a really difficult and important part of the process you go through. And I always describe the people who originally start a business, when they eventually move on, and we all move on at some point in our lives, it's a bit like giving your baby up for adoption. It's a really, really hard thing to do. But recognizing when it's the right time to do that, and also recognizing for the team when they need to bring people in to help them as they grow is a really key part of the journey to make sure you reach success. Typically, I've seen people probably stay on a bit longer than they should have done, rather than going too early. So helping people with that process and making sure that when new people come in, they feel part of the team. It's very, very easy when you have a startup. Everybody's sort of very close together. It's a very intense type of environment. Bringing new people into that is trickier than it sounds. But if you can make it work in the right way, it's incredibly powerful. And it's all about it's growing the team. To use the Jose Mourinho example, you're constantly adding to the team every year. You think it's great, but you've constantly got to bring new people in to make sure you're still evolving.
I suppose, Patrick, that one of the benefits that you and your team brings is that you've seen this 10 times, 20 times, 50 times, whereas as an entrepreneur starting a business, then you've seen it once, and therefore you're well placed to understand things that they may not about how to resource, who to introduce, when to introduce them, and how to keep that organization growing and functioning as it goes from seed to scale up to even bigger.
I was on the board or chair of 7 of richest startups that went to become unicorns. And whether it was in the airline business, in the space business, the health club business, and lots more as well. They're all very similar. It doesn't matter if you're a bank, a space company, or a health club business, or a train business. The issues we just talked about, they're common across all of them. So it takes a lot of time, but it's time well spent in terms of evolving the team.
Yeah, just to build on that. So first of all, we're very hands-on. So we join the boards of virtually all of the businesses that we invest into, and then helping them through their various stages of growth. There's a couple of things that we really focus on. One is, of course, helping them access capital. So helping them how they articulate their proposition so that it's in the language of investors. We've also know investors around the world that we make that journey easier. But one of the other things that we do that actually we're involved with at the moment with Satellite View is that we help the companies as they are hiring. So entrepreneurs haven't necessarily gone through the hiring process of hiring a VP of sales, a CFO, a VP of marketing. And so what we do is we help those companies by participating in those interviews, by being able to provide our experience of having gone through that with many different companies. What we can do is help them avoid mistakes. Hiring the wrong VP of sales, hiring the wrong CFO can really set a company back by a year or more. So we're really motivated to use our experience and to use the likes of Patrick's experience in order to be able to sit on that panel, interview, take the time to interview all of the candidates, and then help the company select the best person. And that's something that we're going through at the moment, isn't it? I don't know whether you want to talk about that at all.
Yeah, so I think the challenges are we are very lean. We don't have all the resources. We don't have all the funds we want. We don't have all the people we want. And it's walking that road to get the right balance between things. Where should you spend money? Where should you put effort? And if you're hiring someone, yeah, I'd love to get the CEO or the chief strategy officer from Morgan Stanley working for us, and he could open all these doors. We can't afford that guy. So finding the right balance, the right experience in selecting chiefs and the people that are helping me is hugely important. And people like Patrick have that experience and I've done it many times. So pitting people at the right stage as well. It's tough both ways. We want the most experienced people, but have they done it in a startup world? Could they survive that? You need to have done that a few times to psych out these people and see if they can are robust enough, resilient for the task ahead.
I think that there are two interesting points here. One is just again reinforcing the idea that a good venture capitalist provides much more than just money. There's much more support that they offer. And then also thinking about something Patrick said, you may have the right guy this year, but as your business evolves, will that person still be the right person? And it's a constant, process of development and growth.
Yeah, and this is why bringing people like us onto the board and Patrick, we can be questioning is your CFO the right person for this stage of the business? And just having those conversations to keep sort of testing that as we go along. I'm conscious, Nick, that there was an important question that you asked me that I haven't yet covered, which is about not investing into businesses, because that is, of course, just as important as making investments. In fact, you could argue that making the investments the easy part. What you do thereafter in terms of supporting the company and deciding the next rounds of investment as to whether you participate is more important. And we certainly think it is. So we have to take a very disciplined approach as to how we support companies in their follow-on rounds. So we're obviously aware of what those companies have set out as their milestones of what they're going to achieve with the previous amount of funding that they raised in their last round. So we're very sort of conscious about what it is that they said that we would do. And we talked about that we're investors in people. So we're really focused on how they've set their targets and how they've managed themselves in order to be able to get there. So it's a continual appraisal process where we are helping them and sometimes completely outside of the control of the management team, they've not been able to reach targets. And we understand the situation in depth, and we can therefore take a call as to whether a company's missed its targets, it needs to raise more money, and whether we can remain supportive of that business. And we also play a really important catalytic role on these funding rounds because we're the space investor. We're normally the only space investor in the syndicate of investors in the round. So the other investors are also looking at what we're doing to make a decision as to whether they should be participating in the round, particularly as the company goes through its technical development and starts operational in space. So we have to make really difficult decisions because we've got a finite amount of capital and we have to evaluate every new dollar that we invest as if we're making a first investment, because if that dollar is going into a company, it could go into an existing company, or it could also be invested into a new company. So we have to evaluate the returns that we're going to make on each round. And that really leads to some really, really difficult decisions. So there are numerous cases where we have just made a decision where we're not going to continue to support the business. And it's really challenging to do so. We have to explain not only to the management team that we're not participating, we also then have to explain to all the other shareholders and give them our rationale as to why we're not supporting. So in the investment trust, we've identified 2 companies in our last quarterly report where we've made those difficult decisions, and we won't be supporting those companies going forward. They haven't met their targets. We've evaluated the reasons why, and we believe that the dollars that we can invest would be better invested elsewhere. So this is something that we have to remain disciplined about, and it's really the difference between success and failure. The first initial investment is often the easiest. It's what you do afterwards where it really counts.
No, Mark, thank you for bringing me back to that. And I think that you make an important observation, which is that you're evaluating not only the potential success of that portfolio company, but whether it's the best use of your own capital. Absolutely. Because that's ultimately finite, and therefore whether it should be put to work elsewhere. Anthony, can we spend some more time with you? And I know that I touched on satellite view and what it hopes to do, but I almost certainly didn't do it justice. Can you expand upon your plans?
Definitely. So we intend to launch a few satellites into space that have a unique camera on board. So it's in thermal infrared. So we can detect, as you said, we are the thermometer of the world. We can detect the heat emissions from any structure in the world down to a building level, which is unprecedented, and very frequently. So we can measure day and night every few hours. So we can generate the pattern of life. Now, the customers that are interested in that are both security, but also sustainability. So we can detect where in the world energy is being wasted. We could tell people that your house is the worst on the street, and perhaps you should, go and get it upgraded. And we're looking at services where we would help people who have funds, grants for upgrading, like some local councils or government, and property developers, retrofitters. We could direct them towards the new business and be able to apply funds in the right way. Or maybe there's a green mortgage where you can extend your mortgage for to do upgrades. We could help banks focus on that. And then when the upgrade's done, we can make sure that it's done properly, because we will do a before and after measurement, and maybe over a period of time as well. So there's no greenwashing there. It's a fact. And this is extended to financial services as well. So if you're looking at a company that holds a large portfolio of buildings, how is that performing? They have a green strategy, they have a net zero goal, but they probably don't know their carbon footprint today. They don't know where to start to make things better. And if they do any reparation, did it work in the long term? And with this one instrument, you get the same measurement in your supply chain in China as your headquarters in London, as your distribution in San Francisco. And that consistency, uniformity, and independent view will help both the companies and portfolio companies assess whether they're going to get to net zero or not.
Fascinating. And we were talking earlier, prior to this, about how the risks that you've chosen to assume, and those risks that you've chosen to effectively outsource, and where you've allocated resource across your own company. Do you want to talk a bit about that? And I think it speaks to something about the growing maturity of this of the sector, that you don't have to launch your own rocket. Someone can do that for you, and you can focus on what's really your key competitive advantage. So it might be worthwhile talking a bit about that.
Yeah, I think it's very tempting if you're a new space company is build everything yourself, because you can. People do build the satellites in, in their university, and some people start off in their garage building the satellites. But you're assuming a lot of risk on successful design, construction, launch. So we've taken the approach to outsource to the best in class the satellite design and the manufacturer. So ours is building in Guildford by a subsidiary of Airbus. So we know that's going to work. We're trying to retire the risk of our technical risk of our business. So then we took a copy of that camera and flew it on a plane, and it's flown for 18 months around 5 countries. So we've got real data from this camera, and we actually degrade it so it looks like it's from space as well. So that helps with the technical risk, but also the commercial risk. So customers now have example data. This is what you're going to get when the satellites launch. Set your processes up such that you can start getting valuable insights from that straight away. We're launching on SpaceX, probably the most reliable rocket there is to date, at a very good price. We're using AWS cloud, so the cloud computing is reliable, it can be secure, there's very good tools. We've accelerated and got a platform in place in very short order. We've been commercial since funding about 2 years, getting all this together, and we're launching it in May next year. So that and the ground segment, quite often you need lots of dishes all around the world. You can outsource all that. So what we've been concentrating on is once we got the data in our hand in the cloud, how do we make that useful for the world? So both palatable, so making the pixels into meaningful information so that financial services or the guy on the street can understand, but also impactful for the world, because we're really focusing on that sustainability and climate part.
Thank you, Anthony. I certainly look forward to seeing this becoming real. It sounds very exciting. It wouldn't be an investor presentation, investor discussion, if we didn't spend a bit more time talking about risks. And I guess, Patrick, maybe interesting to come to you first. What are the key industrial or technological risks that you think about, or maybe that's too broad a question? How do you characterize risk in some of the portfolio companies that you sit across, and how do you mitigate them?
Well, I think in space, space is obviously, there's risk in space, but there's different parts of space. So if you look at what Elon's done with SpaceX, what Virgin Orbit's done in terms of launch, both of them, launching to space it's a pretty high capital business, and it's not without risk. I think the first of 5 of Elon's flights ended with problems, but you only fix your problems by learning about them. So it's in some ways it's better to have the problems early on, but that costs a lot of money. But when you get there, we just talked about there's 150 launch companies out there, but there are very few of them are actually operational today. But the good news is, as we talked earlier, launch is cheap. So that means for companies like Anthony, you're not having to, you don't have to be in the launch business, and it's very cheap to get to space. So that's one big risk that's been mitigated. There's then, what's the technology? You can either build your own satellites. Some of the companies that Seraphim invest in do that. Anthony's taking a slightly different route to that by outsourcing it to Surrey Satellites, which have got a fantastic reputation for building satellites. So the build side of it, again, is not without risk, but I think across the Seraphim companies, when I look at them, the D-Orbits of this world, the ICEYEs, that they've built small satellites, typically $3 to $10 million a piece. They work, and the really interesting thing for me when I was up in ICEYE in Finland recently, they only build their satellites with a 3-year life expectancy, because they know that the technology is going to evolve so quickly. There's going to be a better option with much greater outputs very, very quickly, which for me is really interesting. And again, is another way of mitigating the risk. You don't have to build something that's going to last a long time. And then the final risk is the market. Are people going to, it's great building a really exciting satellite that does really interesting things, but are people going to buy it? Are people going to buy that service? So when I look at what Anthony's doing with SatView, in a nutshell, what he's doing is saying, I'll look at your building or your house. Has it got some problems from an insulation perspective or power loss of heat? I can save you money and I can reduce your carbon footprint. That's a pretty exciting business model, which I think, it's pretty hard for people to ignore that in terms of buying that service. So, in a nutshell, you've got to get to space, you've got to build what's going to work in space, and then you've got to make sure there's a market for it. And then, as we talked earlier, you've got to grow the team as the company evolves.
So to build upon what Patrick was just saying there, one of the risks that people recognise in space is around debris in space. So this relates to spent parts of rockets from recent years, or satellites that have reached the end of their useful life or they've stopped working. And this creates a cloud of debris in space. As we're now going through this period where ever more numbers of satellites are being launched into space, the problem around debris is now in focus from governments and regulators around the world. So one, limiting the debris and making sure that we don't add to that, and two, removing the debris that's already there. So this is both an opportunity and a threat, because there's the risk threat of debris colliding with a satellite, and even something that's sort of 2 centimeters in size is the same as a hand grenade going off. So there needs to be structures in place to be able to avoid that. But the opportunity is that we've been investing into the very companies that are providing the capability to remove satellites, to monitor the debris that is going on in space, to provide the information sets for the regulator, for the satellite operators, so that they can move their satellites in real time to avoid this oncoming debris, for the rocket launch operators, so that they can launch into areas that are free of debris, so that reduce the risk of the launch. The insurance companies are insuring all of this so that they can have the proper data set, and then of course the regulator that's set in the regulations. So we've been investing into companies that have been addressing this, because we recognise we're also part of the problem. We're the leading space investor globally. We're investing into companies like Satellite View that have got plans to put tens and hundreds of satellites into space. So we felt the obligation to invest into these types of businesses. So one of the companies has been mentioned already by Patrick, Deorbit. So they actually will go and take a broken satellite and remove it from space and push it back down towards the Earth in order to burn up in the atmosphere. So they're effectively a bit like the RAC in space, removing broken satellites. We've got another portfolio company called Astroscale. These are providing in-space services, so things like life extension, refueling. So they're a bit like the quick fit of space. And then we've got a company called Leo Labs that, using ground-based radars, monitors everything that's going on in space. So incredibly, they can see something the size of a 2-pence piece from 1,000 kilometers away. And that 2-pence piece is traveling around our planet at 17,500 miles per hour. And they're monitoring all of those pieces so that they can then allow that data set to be used in real time by all of the operators in space. So this is seen as a risk. It's an area that's going to be regulated going forward, but it's also an area of great opportunity.
Thank you. And Mark, maybe it falls to you to talk briefly maybe about some of the financial risks. And I'm thinking specifically about how funding markets are changing, have changed maybe. How does that impact and affect how you think about funding portfolio companies versus new investments?
So the markets certainly have changed during the course of this year. We've seen heavy reductions in the valuations of technology companies on stock markets around the world. This has caused investors to sort of pause and be much more conscious about the businesses that they're investing into. One of the things that we do is we produce a quarterly index. We've been doing this since 2017, where we monitor all of the private investment flows into the space industry globally. And one of the things that we've been monitoring is how is the appetite for investment in space changing given the macroeconomic backdrop around the world. And it might surprise you to find out that the appetite for space has continued regardless of the macro backdrop. The figures to the 30th of September demonstrate that we are still beating records from last year in terms of the amount of capital that's being deployed into the sector. However, how that money's being invested is the trends have changed. So there's much more investment in the earlier stage of the market, the seed, the A series round, and there's less money going into the more mature companies, the B, C's and D's round. So that is where we're focused on. And from a portfolio perspective, making sure that we are reserving capital for the companies within our portfolio that have got funding needs in the year ahead. Now, as we reported in our most recent results, our portfolio is very well capitalized. Our 26 portfolio companies raised more than $1 billion in the last 12 months. Most of them don't require any funding throughout 2023. So we've reserved a significant amount of capital from the cash that we have remaining in order to support those businesses. And then very selectively, we're continuing to invest into new businesses. At the bottom of any economic cycle is the very best time to be making new investments. So the businesses that we're investing into at the moment, albeit we're investing smaller sums of money, we're investing into those businesses with a view of being able to invest larger sums in subsequent rounds. And that will give us the opportunity to build our conviction in those businesses over time, understand how the management teams operate, and understand and watch how these businesses are growing. So that's how we are focused on the market. The other thing just worth taking into account is some of the structuring we do around our investments. So we use something called preference shares, and these are structured to help us on the downside protection. So they are in fact, we've got them across all of our top 10 companies within the investment trust. Anti-dilution is another term that's used in the venture industry that means that in the event of a down round, we get issued with additional shares in order to rebalance our stake in the businesses. We have anti-dilution across all of the top 10 private companies within our investment trust. So we have thought about these problems in advance. The structuring of the investments that we've made has been crucial to give us the confidence that in the event of a downturn, that we've got structural things in place that are going to help protect the value that we've invested into. The things that I just talked about there are not special to Seraphim. These are methods that are used across the venture capital market. But right now, we're in a market where those things are being tested. And we feel that we're in a reasonable position, and because of the structures that we've used in our historical investments.
Thank you, Mark. That's very clear. And I'm afraid our time is probably drawing to a close. So I'll thank you once again for taking part. You know, for me, it's been a real pleasure to learn so much about a fascinating industry and the really profound changes that are taking place. Before we close, I wonder if any of you have any parting comments. Patrick, anything that you'd add to our discussion?
Sure. I mean, I think the best way I can talk about it is a slightly different way to look at it is the sort of job opportunities, which sort of is akin to investment opportunities. So when I started work a long time ago, if you wanted to get involved in space, you needed an astrophysics degree. You went into a room where nobody really knew what you were doing, and you built big sats or big rockets. We've talked about the applications, whether it's looking at seaweed, illegal fishing, biomass development, server farms, solar power in space, what Anton is doing. The opportunities, the applications are just endless. So just to give one final example, ISI, the company I mentioned earlier, that can look at floodwater heights down to pretty much the centimetre. So imagine you're in an area that's just been flooded. Pretty good day for that in the UK today. You don't need to send people around to check if it's been your property's been flooded anymore. They can just look at where the water's got to, compare that to a map, and send you a check from your insurer. So that's another example. Like, who would have thought that space could have that impact for the insurance industry? So if you're in the insurance industry and you want to get involved in something related to space, you don't need to know anything about astrophysics. You just need to understand the applications and the opportunity. And then at the other end of the spectrum, if you want to sort of look at seaweed and what it's doing for the world, you can get involved in that as well. So the applications that are available and they've grown in the last 5 years are just incredible. And I think that's unbelievably exciting from a careers perspective and also from an investment perspective.
And I think that's certainly been one of my greatest takeaways, how the impactfulness of space and how it really crosses many industries and has a huge amount of practical application. Mark, anything you would close with?
Well, just building on what you just said there, really, I think that most people, when they think about space, they think about rockets, they think about satellites. But hopefully our conversation today has helped people think about the breadth. It's really about what those satellites are actually doing. And if you want to bring that sort of down to your sort of everyday life, it really is around how GPS has, that blue dot in your mobile phone, how you've seen that change your life over the last 10 years and how that's increasing over time. The new space businesses that we're investing into, consider them to be green dots, purple dots. They're all going to start to have a considerable impact on your day-to-day life, in the environment that you're operating in. New space is really going to start changing the world for the better.
Great. Well, look, thank you all to our guests once again. Hugely informative, really valuable. And thank you all for watching. Thank you.